Joining me right now is Jamie Keech. I'm going to let you give a quick intro, as my last interview was with Mr. Ross Beatty, and I'm sure Ashley is still going on with his intro because it's so long. Obviously, he's a very well-decorated man.
Yes.
You actually worked for him, right?
I did. Yeah, I worked at Equinox Gold in corporate development there. I was actually the first employee in the company that became Equinox Gold. So Equinox Gold started, it's a little company called Anthem United. I started there working for a gentleman named Greg Smith, who's the CEO of Equinox now.
Yeah.
He hired me when I first moved to Vancouver. And then over the course of about 3 years, we went on a bit of an M&A spree. We acquired, I think it was 7 companies kind of rolled together. And first it was Anthem, and then it was JDL Gold, and then it was Trek Mining. And then finally, Ross Beatty merged in several assets, invested in the company, and it became Equinox Gold. And that's what it is today.
That would have been quite the experience.
It was great. And so, I mean, I'm an engineer by training, so I come from a totally technical background.
Yeah.
And I actually came to Vancouver with no job and very little relationships, with the goal of getting into the business side of the resource industry, learning about finance, learning about the capital markets, which I had very little background in previous to that.
Okay.
And I was, lucky enough and fortunate enough to land with Greg. And so it was kind of it was like a real life MBA, I guess, in terms
100%.
of M&A in the mining and natural resource sector.
You got involved with some really high profile names right away.
Yeah, well, it was, in a way, it was easy to find the right people because, Greg, the guy I worked for, he'd already been involved in the building and sale of 2 gold companies. They were working out of the office of a company called Sandstorm Gold, which had done very well.
It's a smaller royalty company, right?
Yeah, it's I believe about $1 billion gold
so not
royalty
small,
company.
but smaller than some of its peers.
A lot smaller than the Franco-Nevadas of the world, but
Right.
yeah, it's so anyways, it was a bunch of young guys in their kind of late 30s, early 40s that had a track record of success. I was like 29 years old, and I was like, these are the guys doing what I'd love to be doing in 10 years from now. So
you got mentored and paid for.
Yeah, and I kind of made a joke to my wife, like at the time, like any given day, I was building financial models or meeting with investors, or I was doing photocopies and like doing like anything that had to be done. And I did that. The first year was all that, and then it kind of grew from there.
That's a cool story. Where did you come from? Where'd you move
So I'm from a little town in Ontario, outside of Kingston, Ontario. I went to U of T. I did a mining engineering at the University of Toronto. I did a master's degree at the Camborne School of Mines in the UK, focused on environmental engineering and carbon reduction for mining projects.
What's the little town called?
So I grew up on the end of this dirt road called Parrots Bay Lane, and it was technically part of the town Bath, Ontario.
Bath, yeah.
But it's like calling it a town it was a ways away from where I grew up.
So I live in a small town just north of Bowmanville, Ontario.
Yeah.
So not that far.
What's it called?
It's called Inniskillen, Ontario.
Yeah, I know Enniskillen.
They're known for the general store and the ice cream.
Isn't there like a beer or something? Oh, it's the ice cream. That's
the ice cream.
Yeah.
Cool. Okay, so tell us about the new company that you've got going on. How you even got involved in this? Like, let's hear the journey.
Yeah. So the new company, which is about almost 2 years old now, which seems crazy because it feels like we just started it yesterday, is called Vida Carbon, and I'm the chairman of the company. I founded it with a partner called VRIC, who's a very good friend of mine for many years. One of the first people I met when I moved to Vancouver.
Okay.
He does sound like a Serbian gangster when you hear his name, but he's actually a Peruvian of Serbian descent. So he immigrated from Peru to Canada when he was like 20 years old, put himself through UBC and, really built a life for himself here, and came to Canada super hungry, super like ready to make a name for himself. And when we met, he was kind of doing what I was doing, which was like kicking around Vancouver, looking for the right group to work with, the right sort of, you said it before, mentorship.
Yep.
I hooked up with Greg and what became Equinox. Velco ended up doing an MBA at HEC in Europe and then working for Pala Investments, a big private equity firm out of Switzerland, and then came back here to join me to create Vita a few years ago. And so Vita, we can get into this in some depth, but Vita's investment is an investment company investing in the carbon credit sector. So we deploy primarily the streaming and royalty model. Your listeners who are familiar with the gold streaming and royalty model will know what that is, or energy for that matter. It's the exact same thing. We're taking a proven business model and we're putting it down in a new industry.
And it's a less risky model in a new industry as well.
Well, yes and no. So in some ways, there's greater risk because there's greater uncertainty, right? It's a new industry that's growing rapidly, but because it's new, there are very, very significant margins to be had there, right? So if you look at Franco-Nevada for when they started, right? So this was the first gold royalty company that was publicly listed. Their return to shareholders was like 38% year after year for the first decade or more of the company.
That's
so
significant.
It's like they outperformed gold, they outperformed miners, they outperformed, most companies in the world, right? If you look at a gold royalty company today that are, growing or in acquisition mode, they're not doing that. The average gold royalty people are buying today is like a 1% to 5% sort of royalty.
Yeah.
And it's because, people, like because of Franco-Nevada, because of Wheaton Precious, because of these big companies, people woke up and said, shit, there's a ton of value in this sector, ton of capital flowed in, the sector became more efficient and the margins got squeezed out. So that hasn't happened in carbon yet, right? So in carbon credits, we are routinely seeing projects with IRRs, internal rates of return, of 30%, 40% or higher. Similar to the gold industry was, in the 80s and 90s.
Yeah.
And so our thesis is the exact same thing will happen in carbon as happened in gold, that the low-hanging fruit will be plucked and then the margins will be shrunk, but right now they exist. So we're working hard to capture as much of that value as we can.
So you want to be kind of the Franco-Nevada of this new emerging market.
$40 billion company with 50 people working there, I think I would take that for sure.
Yeah, who wouldn't take that? So what's the average cost of credit right now?
So that depends, right? So the average cost globally, probably, if you were to buy a credit in the spot market, you'd be paying somewhere between $10 to $12, I would say.
Okay.
Now, that's down from last year when it was kind of peaking around 15-ish, I would say.
Okay.
But it's way, way up from like 5 years ago, which when they were like a couple dollars, maybe generously.
Right.
So that's the cost of buying a credit in the market today. Our strategy is a bit different, right? So we're in the business of creating credits, right? So we invest in the projects that generate these credits. And there's something like 174 different methodologies, they're called methodologies, by which you can create a carbon credit. This is like planting trees, conserving forests, improved agricultural practices, improved energy efficiency, renewable power. All these things are approved and audited methodologies by which you can create credits. So we invest in the companies that are doing these things, whether they're planting trees and conserving rainforest in Brazil, like one of our assets, replacing wood-burning fire pits with high-efficiency stoves in India or Africa, other of our assets. So our goal is to create credits, frankly, at a fraction of the price that we can sell them at.
Right.
Yeah.
And obviously this is a pretty simple economics thing where you're thinking that demand is going to be greater over the next 5 to 10 years.
I know demand is going to be greater. So, I mean, I'll give you the most blatant example of a supply-demand gap I've ever seen in my entire life. If you look at the total number of carbon credits sold last year, so I guess we're in 2023 now, the total number sold in 2021 was like about 100 million to 200 million credits, depending on who you ask. It's somewhat opaque. Last year, we more than doubled that. But by 2030, Shell Energy is committing to buy 120 million credits per year every year. So there's one company that's basically buying the entirety of the market in 2021 in 7 years from now, right?
Right.
And so Shell has made those commitments to be net zero. We've already done one deal with Shell at this point, so we've gotten to talk to their team, and they're
get a relationship.
Very insistent that this is a target they've set publicly. This is what they're going to hit. But, BP, Exxon, Chevron, Total, they've all made similar commitments. So is every major mining company in the world. So is every major tech company in the world. So is every major airline. It's something like 50% of the Forbes 2000 companies have made net zero commitments by, typically by 2040 or 2050. And so the demand is huge.
Yeah. It does seem, when you look at what's happening politically anyways, that it looks like corporate and politics are coming together to push this. If you want to get financing down the road, maybe not right now, but down the road, you might have to be meeting these requirements or else you just won't get financed.
It's crazy. So it's like I've spent my whole life working in commodities, and, commodities go through typical cycles and they're fairly predictable. But typically what you're seeing in commodities is people are always trying to get them to be as cheap as they can, right? People want to pay as low a price as possible. I've never seen a commodity or a product where everyone's kind of colluding to push the price higher, right?
Right.
Like the whole purpose of carbon credits is to incentivize, is to one, offset emissions, but two, to go up in value to incentivize corporates to change their behavior, right? Because they're buying credits to offset emissions, and maybe it's worth touching on what that is, that
Sure.
One carbon credit represents 1 ton of greenhouse gas that has either been removed from the atmosphere or kept from being emitted in the first place.
On a net basis.
On a net basis, correct. Well, no, it's yeah, exactly. And so if I'm a company that wants to be net zero and I emit, 1 million tons of greenhouse gas emissions a year, I buy 1 million carbon credits, it balances the teeter-totter, so to speak, and you're net zero. The goal of them in a lot of ways is to go higher in value so that the company will then say, it's getting kind of expensive to buy carbon credits. Maybe we need to switch to electric vehicles or renewable energy or et cetera, sort out our supply chain. So the price escalation predictions on this are pretty wild. I said earlier, on average, we're seeing about $10 a credit today. We've put a compilation together of all the major sort of research firms, consultants, the KPMGs or EYs of the world that are making predictions of this. And, they range on the conservative end from, $20, $30 per credit to over $180 a credit. We don't price our investments assuming they're going to be $180 a credit.
Yeah.
But if they get, frankly, if they stay over $10, we're going to be very happy.
Right.
Yeah.
So yeah, there's lots of room for margin there. Would you fund will you fund something that's not certified yet? Like, hey, like it kind of reminds me of the cannabis thing where like failed mining companies that, weren't successful with the drill multiple times.
Yeah.
Would at one point be able to say, here's an LOI to the market. We're going to potentially buy this facility that doesn't have a license yet. Boom, that's the stock would go 2-3x on just an LOI, right? So when I was doing my due diligence on this, I kind of thought about that, right? And right now, the markets aren't that good. There isn't a lot of liquidity in the juniors, so I would imagine a lot of these companies are private, waiting for the market to be good, and then you'll see people list, right? Maybe. But going back to this, what's your risk profile there when you're looking at funding people?
So the answer is, to your question, would we fund something that is not currently certified to generate carbon credits, is sometimes.
Okay.
So in a lot of ways, that's where the greatest margins are found. If you can get in before a project is certified, provide that capital to get them through the certification process, up and running, operating, that's where you make the biggest returns. To be able to do that, you have to be very confident that it will be certified, right?
Yeah.
So our team, we're a small team. We're about 9 people. We're mostly from a financial background. But what we did when we started the company, the first investors we brought in were partners of ours now today. They're called Clear Blue Markets. And Clear Blue Markets, they're a carbon credit advisory and market analysis firm. They've been around, I think, 7 or 8 years, but the 3 founders have been working together for 20 years in this sector. They've worked for big banks, they've worked for big corporates, and they own over 17% of the company. They've invested a lot of their own money in the company, and we brought them in early on and said, look, we come from a financial background. We understand commodities, we understand these financial instruments, we know how to evaluate a project. What we really need are credible, capable technical ability to be able to properly evaluate these projects. I said I'm a mining engineer. I did this sort of work a lot in the mining sector.
Yeah.
I have a tremendous amount of appreciation for technical skill sets. And what we found in the carbon sector is there's very few people with any experience. There hasn't been a ton of money in this sector until the last, call it 3 or 4 years.
Yeah.
And so there hasn't been a lot of jobs for people. So to find, there are a handful of people that we've been able to find that have been at this for more than 3 or 4 years. And Clear Blue was a huge part of our strategy.
Right. You wanted to lock them up.
Exactly. And we actually internally said, look, if we don't find a strong technical team partner to work with, we're not doing this, because we're not confident in our ability to go out and make good investment decisions on behalf of our shareholders. So that's a long way of saying, yes, we do invest pre-approval or certification. However, we have the team that has the credibility and the experience to properly evaluate the likelihood of whether that will succeed. Because not only have they been doing this for 20 years, they've actually written, the team has written something like 60 of the methodologies currently used by the verifiers to approve projects. So a methodology is the framework by which a project is judged to be accepted as a carbon credit project. So these guys actually have literally written the book on it.
So are they exclusive with your company, or can they consult for others?
They can consult to other people. They have a thriving business where they consult to a lot of the biggest companies in the world.
But you got an inside track?
These are they work with the big oil companies, the big tech companies, the big banks. When some oil and gas company says we're going to be net zero by 20 whatever, often they're calling it Clear Blue to help them get to that sort of, and evaluate the steps they need to take to get there. Do we have an inside track? We have a great relationship with them. We've been working with them since day one. To date, they've worked exclusively with us in what you'd say the junior sector, the startup investment companies. We really focused for them on skin in the game. They own a big part of the company by design, because we want them to care about what we're doing and to frankly feed us projects. And we've got 5 projects in the portfolio. Several of them came directly from Clear Blue because they'd had relationships to these with the founders of these projects. They consulted to them, whatever, and they said, hey guys, you should take a look at this. And
fantastic business model. It reminds me of the Charlie Munger quote, right? Show me the incentive, I'll show you the outcome.
Yeah, and if we do what we're trying to do, it'll be incredibly lucrative for them and incredibly lucrative for us and our shareholders, and that's the goal.
Right. So how could this have a negative effect on communities that you're going in to try to acquire land or something? I'm really going into hypothetical land here, but what could be a negative side of this where you have to work with communities?
So here's where the carbon credit sector does get some criticism for this, and I think rightfully so, because in the past, some of the deals that companies have struck with the developer or the communities have been, let's call them extractive.
They take jobs
right?
away and stuff?
No, not taking jobs away, but they basically take all the value out of an asset class, right? So they might say, we're going to be buying credits from you, and we'll pay, when credit prices were low, they struck some deal where they're paying 50 cents, $1, $2 a credit, and then carbon credit prices rip up, and it's the community kind of looks up and is what the hell's going on here? We're making pennies on the dollar here. These guys are making a fortune. So that has happened. There's severe criticism for that, and I would say rightfully so, because this is often assets that are heavily embedded in the community. So the way we structure our partnerships are, one, we don't take everything, first of all. We take a portion of the credits. Our streams range from 15% to 50%, depending on the project, depending on how much money we're putting up, depending on the risks we're taking. The project developers, they get a certain amount as well too. But pretty much everything we do, when it impacts a community, the community is getting a percentage of the revenue generated by that project. So if carbon prices are at $10, they're going to make money. If carbon prices go to $100 a credit, they're going to make even more money. Yeah. So we're very aligned in trying to maximize the price. like, don't get me wrong, like we're here to make money. This is an investment company. We want to get our return.
Yeah.
But what we don't want is to be at odds with the community we operate in. And we don't want to, like, not only is it not the right thing to do, but it's, there's no better way to shoot yourself in the foot, because it would be very easy for a community to block a project like this from occurring if they were so inclined to do so.
What are most of the countries that these deals are getting done in?
They're getting done all over the world. We have projects in Mexico, in Ghana, in India, in Brazil. We are actively looking at projects right now throughout Latin America, throughout North America, throughout Africa, and throughout Asia. Some of our peers and competitors have done projects in all over, a lot in Asia, and a lot in North America. I would say where we really have shown we have a bit of a competitive advantage is in Latin America, a large part because Velko, our CEO, is Peruvian. Mm-hmm. He's Latino. He also is very sophisticated finance experience, and he's proven really quite brilliant at bridging the gap between sophisticated financiers and local operators that might be and often are incredibly good at what they do on the ground and are able to, generate and execute on these projects phenomenally well, but maybe don't have the experience of dealing with big banks or debt facilities or financiers. And he's kind of been able to marry those two worlds. And I didn't touch about this, but his family's background is forestry in Peru. So it was a very easy transition for him.
Sure. So I just want to pause there, because if from what I'm hearing, if there's someone listening to this that is 20, 25, 30, whatever, 35, and you're kind of lost and you're going, I don't know what I want to do, I'm not happy with what I'm doing, this might be an industry sector to, maybe look into, because obviously you're going to need people like this.
Yeah.
Right?
Well, it's a good point, right? Like when we started the company, like being frank, we started it and we were like, good, we're going to get some assets, we're going to get some money, we're going to just take our time, we're going to advance the projects, grow very slowly, and eventually we'll have the big energy companies and we'll to start to sell products too.
Yeah.
That happened about 100 times faster than I expected it to. One of the biggest, the big three energy companies in the world, I think it was less than a year. It was like 7 or 8 months after started. They flew their head of carbon for North America here to Vancouver to meet with us. Yeah. And they sat down at a table in our boardroom and they were like, look, you've done great projects. We want to partner with you on things. We're interested in buying credits. And I was like, what are you guys doing here? You guys are like a multi-$100 billion company.
You said that?
Yeah. I was like, what are you doing here? We just got started. Like, what? Like, this is crazy to me.
Yeah.
And she was just like, look, you guys have done good projects. You've got great assets. Like, we've committed to buying these things and we can really leave no stone unturned. And one of the takeaways I really had from that, which was fascinating to me, because, I've worked on a lot of projects in the mining industry, and this is the biggest company I've ever dealt with, in a major way. Yeah. And the thing is, there's nobody in the sector with any expertise yet, right? So like, look at a tech company versus look at an oil company, right? All the oil billionaires are in their 60s. All the oil executives are in their 60s. A lot of the tech guys are in their 20s or 30s, right? Yeah. And why is that? It's because when you start a tech company and it's new, like, if you're Mark Zuckerberg building Facebook in your dorm room back in the early 2000s, you're not, like a 60-year-old is not competitive with you, right? You each have no experience in this, so everyone's got the same amount of sort of experience. I think we're seeing that right now in the carbon sector. It's that there's no companies, I shouldn't say no, there's very few companies with much depth of experience. There's very few people with much depth of experience. So if you're, motivated, smart, ambitious, and ready to work hard, there's a lot of opportunity there. So that's what we're seeing, and that's been reflected in, frankly, the momentum we've had so far, which, it's really cool. So Lewis Hamilton is arguably the most successful Formula One driver in history.
I know who he is.
He's like the Michael Jordan of the sport.
Good-looking guy.
Yeah.
Not
only
white.
Successful African-American driver. Right. Only African-American driver in F1. The most successful by maybe ever. I don't know that one. But Lewis owns a a off-road electric racing team.
I saw that on the plane ride here, actually.
Exactly. So it's called, the league is called Extreme E. They they take these cars around the world in a big boat, and they race electric cars in impacted areas by climate change to bring awareness to climate change. It's part of an Amazon Prime series.
This is on your website.
This is on our website.
I saw it.
But we got put in touch with Lewis's management team, ended up striking a partnership, and became the name sponsor. So it's called X44, which is Lewis's number.
Little bump there.
Vida Carbon Racing. So
that'll be the thumbnail right there.
Yeah, it's cool. And so where I'm going to this is have had the chance to go to a couple of these races, and the people I've met there are insanely wealthy, successful, often well known, and there's just an incredible interest from an interest perspective, how do I get involved in addressing climate change? And from an investment perspective, they say this is an opportunity, these changes that are coming that are going to be driving the prices of battery metals and carbon, and how do we get exposure to this as investors? And the level and scale of interest is like nothing I've experienced in my career. In a big macro event, you're talking like a hyperinflationary environment.
Or a war in, the political spectrum right now gets completely shifted, which is an extreme hypothetical, right?
Yeah.
You can't predict that.
What do you think happens to energy prices in that environment?
They go up.
Okay. Who are the biggest emitters in the world?
Oil companies?
Yes. So, in an environment where energy prices are going through the roof, you're feeling that in your housing, your home heating bills, and filling up the car. What do you think the average person is going to be thinking to energy companies? Do you think they're going to say, listen, these guys have got it pretty rough, let's give them a break right now? Do you think they'll be more inclined or less inclined to buy carbon credits to appease people that are saying... Yeah. Exactly.
So that's okay, good.
And I've thought a lot about this as well, because I 100% agree with you. It's the biggest single risk, right? Big macro changes. Yeah. Because at the end of the day, these are regulatory products and they're voluntarily purchased. So people can just choose not to purchase them. And in any environment, when something, no one wants to buy it, it's worth a lot less. And that's a situation I don't want to find myself.
Yeah.
So I've put a lot of time thinking about this and talking to people about this. My view is that in that environment, there will be increased pressure on the big energy companies, some of the biggest emitters in the world, to buy these things. And frankly, they'll be making so much money buying it will be a drop in the ocean for them.
What's the game plan here? Because the markets aren't really good right now.
So we're a private company right now. We're well-funded. We're able to advance our agenda for the next year and continue to advance our existing projects and bring in new projects. We're always... as a venture stage company, we're always on the lookout for our next financing. We're an investment company, which means we need money to invest. Yeah. So we're working on that right now. If you're asking when we're going to list, and if we're going to list, the intention is to list on a public Canadian exchange. We have not set a date publicly for that. It could be this year, it could be next year.
You waiting for markets to turn though?
Yeah, of course. Yeah. There's only one reason to list a company. It's access to cheap capital.
That's right.
Right now, there's not a lot of access to cheap capital in venture markets. Sort of investors have pulled back their risk capital, and I'm not finding from the many conversations I have any advantage in raising capital for being public right now for us.
Yeah.
Two, the beauty of a royalty and streaming company is that they historically trade at a premium to the value of their assets. So like a gold streaming company done well will trade at something called 2 to 3 times net asset value,
NAV.
right? NAV, exactly. Our peers that are listed right now have been hit pretty hard, and many of them are trading at or near cash values, right? Mm-hmm. So they're not getting value for their assets at this point, and it shows a skepticism of this in capital markets.
Yeah.
That's going to change, in my view. That these projects are going to start generating returns, and they're going to see, this is not just some fantasy. These are real assets that are creating real value.
Yeah,
but I think that has to happen before they start to really get value in the markets. People really see the potential in it, and I'm more than happy to let one of our competitors we can list and ride the momentum created by someone else.
Yeah,
you know?
it's a savvy thing to do, and also you don't have to be a part of all the noise. Jesus.
Yeah, look, we're focused. We've got a great business. We're focused on building it. You know, like I mentioned, we've already sold a package of credits to Shell Energy, one of the biggest companies in the world. We've got talks with basically every major energy company, mining company, anyone you would think of who would want to buy these things. We're advancing the business, and we'll list when the time's right.
Okay, sir.
Thanks for having me.
Let's give a handshake there. That was a great interview. Actually, one of my favorites, to be blatantly honest. Not that I don't like the other ones, but I learned a lot just going down a rabbit hole, and you're very well spoken. You've got experience. You put the grunt work in the capital markets. So yeah, it's a great story, and I think investors are really going to wake up to this and get interested. Where can people find you? Our audience that maybe hasn't heard of you yet? Yeah,
you can find me on Twitter, just Jamie_Keech, Keech. Okay. I'm on Twitter, and then our website, vitacarbon.com. There's contact information there. You can find out more about our assets and team and anything else you might want to know.
Awesome. Again, thank you very much, and we'll end it here.